Welcome to Anafram Market Perspectives.
Anafram Market Perspectives. Friday recap: tariffs, tails, and tech. What this week really meant. Welcome back to Anafram Market Perspectives. It's Friday, September 12th. This week brought tariff headlines feeding into inflation, a softer labor market, and a big reshuffle in tech leadership. Let's break it all down. The S&P 500 weekly recap. Leaders and laggards. The S&P 500 heat map told the story of rotation. Winners. Oracle surged more than 38% after unveiling an aggressive AI cloud outlook. Broadcom rallied nearly 18%. Tesla climbed almost 9%, while Alphabet and Nvidia gained around 3%. Micron also added more than 20%. Laggards. Apple slipped over 4% following its iPhone event. Microsoft and Amazon eased modestly, and AMD lagged among chipmakers. Netflix and telecom names like T-Mobile also struggled. The takeaway? The market broadened. AI infrastructure companies carried the baton, while consumer-facing tech digested prior gains. Trump tariffs. Why they mattered this week: tariffs showed up in multiple ways. Inflation passed through. The Consumer Price Index rose 0.4% in August, pushing the annual rate to 2.9%. Core CPI stayed at 3.1%. Analysts pointed to tariffs as a key driver of higher consumer prices. Labor versus prices. Jobless claims hit 263,000, a four-year high. That keeps pressure on the Federal Reserve to cut rates on September 17th, even as inflation edges up. Fiscal angle. Customs receipts hit a record $29.5 billion in August, compared with just $7 billion last year. That narrowed the budget deficit by 9% year over year. Global spillovers. Mexico announced tariffs of 50% on Chinese autos, plus levies on steel, textiles, and motorcycles, covering 8.6% of imports. The move protects more than 300,000 manufacturing jobs while signaling closer alignment with Washington. The bottom line: tariffs are no longer just rhetoric. They're feeding into prices, deficits, and global supply chains, creating both near-term inflation and longer-term uncertainty. The weekend data, mixed but manageable. This week's macro releases highlighted the tug-of-war between growth and labor softness. Japan GDP expanded 0.5% in Q2, annualized at 2.2%. China's CPI fell 0.4% year over year, while PPI dropped 2.9%, showing lingering deflation pressures. U.S. CPI rose 0.4% in August, with core CPI steady at 0.3% month over month and 3.1% annually. Producer prices also slipped 0.1%. Initial jobless claims jumped to 263,000, while payroll revisions erased more than 900,000 jobs from prior months. The Atlanta Fed GDP now stayed at 3.1% for Q3, reflecting steady growth despite labor weakness. U.S. crude inventories climbed nearly 4 million barrels, while Cushing stockpiles dipped slightly. Mexico's CPI came in at 3.57% year over year, above July's 3.51%. Net. Growth momentum holds. Inflation is still above target, but rising unemployment keeps the Fed's rate cut narrative alive. VIX. Calm with undercurrents. The volatility index hovered around 15.6, its lowest level in months. On the surface, that's calm, but options desks are still paying up for protection, especially around tariffs and next week's Fed decision. Think of it as calm seas with undercurrents you can't see yet. Bonus. Monday's picks in review. ETF QQQ. The NASDAQ 100 ETF held above its Ichimoku cloud all week. MACD momentum stayed flat, rewarding dip buyers rather than breakout chasers. Oracle earnings were slightly shy on revenue, but the AI cloud outlook drove a massive re-rating. Shares gapped higher and defended new levels through the week. Adobe beat on both earnings and revenue. The stock consolidated inside its cloud base with MACD momentum turning positive. The setup favors a breakout if momentum continues. Final takeaways: rotation defined the week. Oracle and Broadcom carried leadership while Apple and Microsoft cooled. Tariffs are now hitting inflation, boosting U.S. fiscal receipts and driving Mexico's policy. Economic data showed a cooling but manageable balance. Growth intact, but jobs clearly softening. Volatility remains subdued, but tariff and Fed risks make cheap hedges attractive. Positioning still favors staying long NASDAQ via QQQ, watching Oracle as a new AI leader, and keeping an eye on Adobe for a potential breakout. That's the week. Thanks for joining us here at Anafram Market Perspectives. We'll be back Monday with your pre-market game plan, earnings spotlight, and fresh ETF and stock picks. Stay tuned, stay strategic.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives.